Hey guys, in this video I will be talking about how to value a small business. So in this video I'll be talking about how you value micro businesses and small businesses because they are different. Now, some people have a micro business and they think it's a small business, but it's not a small business, it's actually a micro business. So we need to define the difference first. So a small business or a micro business, let's start with a micro business. A micro business is any business which is doing up to 1 million in revenue or 100,000 in profit. Okay, so if you're doing 1 million in revenue or 100,000 in profit, up to 100,000 in profit, then your business is considered a micro business. So anything less than that, your business is a micro business. And actually I would argue and also say that if your business is doing less than 200,000 in profit, then your business is a micro business. Why? Because as a individual business owner, when you're putting 100,000 in, and that's net profit, by the way, we're not talking about EBITDA, we're talking about net profit here. If you're putting 100,000 or even 200,000, you are okay to sustain your lifestyle as an individual business owner, but you're also not living extravagantly. You're not having a fantastic lifestyle, but it's good, it's better than the average incomes, right? Because it's six figures that you're putting, or multi six figures is up to 200,000. So that's what a micro business is. So a small business, in contrast, is a business which is doing from 1 million in turnover to 10 million in turnover. And normally these businesses are doing up to 1 million in profit. So up to 1 million in profit. Okay, so that's when you're talking about a small business. So you need to identify that these two types of businesses, what we're going to be talking about in this video, and how they are valued. Now there's a different valuation for micro businesses and there could be a different valuation for small businesses, and the valuations do not look at your revenue as much. So it's not talking about the top line figure, it's more about the profit than the top line revenue. So that's the number one thing that you need to understand. Also, I've got another video which talks about how to work out your EBITDA. The other thing you need to take a look at is your EBITDA. So EBITDA is earnings before, let's just write this down, EBITDA here, okay, EBITDA, that's how it is with the T. So it's earnings before interest, tax, depreciation and amortization. Yes, go and watch that video if you haven't already watched it. It's on whichever channel that you're watching, because I've got YouTube and I've got TikTok going on over there and the other camera. So yeah, work out what your EBITDA is, then you can identify it. Now small businesses or micro businesses do also work on SDE, which I actually haven't made a video about yet, but guess what? I'm going to make a video about it next, so it'll be on the channel at some point anyway. So SDE, micro businesses work on SDE, and small businesses and medium-sized businesses work on EBITDA. So you need to identify where you are. We're not going to talk about medium-sized business valuations in this video, because there are other factors which go into medium-sized businesses which can increase the value of a medium-sized business. So we'll talk about small and micro businesses in this video. So we're going to work on the assumption that let's talk about micro business first. So we're going to talk about micro business valuations. So you need to understand that once you understand what your profit number is, your SDE, seller's discretionary earnings, once you've identified that, or your EBITDA, then you can start working out something called a multiple. What multiple is applied to your business when you are looking to sell it? So we're going to take 100,000 because it's a nice square number. Let's say that your business has an SDE or a EBITDA of 100,000. That's considered a micro business. Number one, the multiple can be from 1 to 3x. Okay, 1 to 3x. If anyone is telling you that your business is worth 4x, 5x, 6x, whatever, and you're doing 100,000 or even 200,000 in profit, then they're telling you lies, right? They are telling you lies. In fact, up to 250,000. If you're doing up to 250,000 in profit, you're still between the 1 to 3 times multiple. Yes, the 1 to 3 times multiple still applies here. It's only once you get past the 250,000, and also there's things like deal structure which also affect that, which we might not talk about in this video. We'll see how we get to. that also affects the multiple. But generally speaking, 1 to 3 is the range when you're looking around about these profitability numbers in your business. So what does that mean? So let's start off with the 100,000. Let's start off with the 100,000. So this is the adjusted EBITDA, your adjusted SDE, after you've taken into consideration everything regarding your particular business, because again, every business is different in the way that the owner sets up the structure. One business may be worth more, even though it's doing 100,000, where another business which is also doing 100,000 is worth less. There's other factors, meaning how much involvement is there from the owner? Has any of the processes been written down? Where are the sales coming from? How many customers do you have? Have you got too much concentration in customers? Have you got too much concentration in suppliers? All of this needs to be taken a look at, which only a good M&A advisor will be able to identify. A good M&A advisor. There are too many bad brokers out there, right? So you need to be careful of them. So let's say 100,000. What does that mean? If your business is worth 1x, why is the business only going to be worth 1 or 1.5x? Yeah, because the owner is the main person in the business. The owner is he's the general manager. He's generating a lot of the sales. He's got a very small team. Not much is happening with the team in terms of sales. It's mainly administration or customer service, and that's what they're doing. So your business is going to be worth 1 to 1.5x. It's not going to be worth more than that, right? So if it's 1.5x, you take 100,000. Take 100,000. Let's use pounds for now, and you multiply by 1.5. So your business is worth 100 pounds. We said, isn't it? 150,000. That's all your business is worth, right? 150,000. Why? Because you've got only one other salesperson other than yourself, and yes, that person might be generating half of your business, but that means half of your business coming from you. And someone who's going to be buying that business is essentially buying a job, but a little bit of a better job, because they'll be able to generate 150,000 in year one, okay? Or 100,000 in year one, I should say, 100,000 in year one. So that's what 1.5 means. If, for example, you've got a bit more structure, so let's say you're the owner, right? You're the business owner, and you're just the manager. You've got salespeople who are generating 100% of their revenue. You've got administration staff. You've got a bookkeeper. You've got the general business structure set up, and you've got steady growth over a period of time. Then your business might be worth 3x. Yeah, I'm just gonna jump from 1.5 to 3. Could be 2. Could be 2.5. Yeah, we'll just move. Just examples. Remember, yes. So business could be worth 3x. So let's say, again, same business doing 100,000 in profit, but because all you're doing is the management, then your business might be worth, okay, you know what, really, if you're still doing the management, your business can be worth 2x, right? That's the truth of it. 2 to 2.5, but we can use 2x here. That means your business is worth 200,000. 50,000 more than that one. Okay, 50,000 more. Now let's say, for example, you've got a general manager in place. You've got a general manager, and all you do is you coach the general manager 5 hours a week or something like that. That's when your business is going to be worth 3x. So your business does 100,000, yeah? It's doing 100,000 in profit. All you're doing is coaching the general manager. You're not there day to day. The business is running without you, and it's got steady growth. Then your business is worth 3x, and you can set out 300,000. Okay, so you can set out 300,000. It also depends on the deal structure and things like that. So very roughly, if you've got micro business, remember this is for micro businesses. Yeah, you've got micro business, and your business is doing 100,000 to 200,000 up to 250,000. Now, a 250,000 business in profit, unless you're generating all of the sales, it won't be worth 1 or 1.5x. You'll probably be doing in the 2 to 3x range. As your starting point, your 2x. Why? Because it's a larger business. Yeah, slightly less risk, and the sales are probably being generated by other people, not by you. And if it is you, then it's got too much owner reliance. The number one thing you need to do is take away from owner reliance. Take away from owner reliance. And if you're watching this video and you want to buy a business, if a business has got too much owner reliance, it's not worth 3x. It's going to be worth less. Yeah, this video is for both buyers and sellers, right? So you just need to identify the general structure. So that's micro business. And again, there's so much else that goes into, the valuation of a business. But we can, we can talk about that on a call if you're on the coaching and stuff like that. Right, let's talk about small businesses. So small businesses has a different range of multiple. There's a different range of multiple. So small business, and again, we're talking about profitability here. Yeah, small business is, we're going to start the small business profitability at about 200,000. Okay, we're going to start it over there. 200k, and we're going to take it up to 1 million. Right? 1 million in profit, in EBITDA. Here, seller's discretionary earnings starts falling off and it starts going into EBITDA. It moves from SDE to EBITDA. And EBITDA is when you're looking at a business, you do an adjusted EBITDA. In the EBITDA video, I think I do a video about add backs as well. I've definitely got a video about add backs, so you can go and check that out as well. If anything can be added back. So your business has been doing between 200,000 and 1 million in profit in EBITDA. Now your business has a different multiple valuation. So your business multiples can go from 2 to 5x. That's the general multiple that your business is going to be worth. Okay? There are instances where it can be worth up to 8x, but there needs to be something spectacular and very unique about your business for it to go past the 5x in this range. So if anyone's saying that your business is worth 8x and you've got 2 to 5 and you've got 200,000 to 1 million in profit in EBITDA, then they're telling you a lie again, and your business is worth between 2 to 5x. Again, same principles in terms of owner reliance. You go back to that, to the lower mark. More independence from the owner of the business, and it goes up to the 5x mark. Then also you're looking at how many employees are being used to generate that profitability. You've got a small number of employees and spread out nicely. You've got structure in your business. You've got all of the different departments set up correctly. You've got processes in place. Then your business starts going more towards the 5x. Maybe if you're in an industry where, for example, the average profit is 200,000 in the industry, but your business is doing 500,000 in profit, yes, then the multiple goes on to the higher end. Why? Because you're outperforming the industry. You're outperforming the industry. So all of these factors go into why something might be 2x and why something might be 5x. So let's take an example. We'll take on the lower end. And generally speaking, the lower your profit, the lower your multiple. The higher your profit, the higher your multiple. Okay? So if you're going to be doing, for example, 1 million, then you might be 3 to 5x as opposed to 2 to 5x. It's not always the case, but it could be. Yeah, it's more likely to be, I should say. More likely to be. So let's take a low example first. So let's say, for example, and this is, if you want to sell your business within the 7-figure range, this should give you a clue, right? So if your business is doing 300,000 in profit, and you are, for example, the general manager of that business, and you've got salespeople, you've got everyone underneath you, your business is probably going to be sell for 3x. So 3x, I don't know why I done that as an equal sign, but 3x is going to be 900,000. Yeah, very close to 1 million, very close to 1 million, not quite 1 million, but close to 1 million. So 900,000 you'll be able to sell your business for if you're doing a 3x. Now let's say, for example, you don't step foot in the business. Like currently, I'm in negotiation to buy a business at the moment, and the business owner hasn't stepped foot in that business, in operationally running the business or anything like that for the last 3 or 4 years. So 8 years ago they left the business, and then 5 years they haven't done anything in the business. It's the managers that's been doing everything, and it's got growth. That business is worth more. So now that business might be worth 4 or 5x. Okay, if you're doing 300,000 in profit, it probably won't go to 5x unless you're outperforming your industry. Right? So let's say, for example, you got 400,000 and you do 3x. Let's take 3x and 4x. So 1.2 million. Now you come into the millions range, yeah? 1.2 million. Same business valued at 4 times multiple. Why? Because you don't do anything in the business at all. In the previous example like I gave. So that's 4, that's 1.6 million. 1.6 million. So the clue is that if you want to sell your business for 7 figures or within the 7-figure range, you need to be doing at least 400,000 in profit. It's difficult to be in 300,000 in profit and get $1 million plus for your business. You might be able to touch the million mark. There may be someone coming along, for example, who values your business significantly. Why? Because it's more valuable to them for taking over your business. Maybe you're in the same market, meaning in the local area, and you're doing 300,000, they're doing 300,000. They know if they buy your business. Maybe it's, for example, on the same street. We to close down that premises and bring all of the customers there, then that's worth more, or it could be worth more. Yes, so you can touch the $1 million range, but you need to be doing at least 400,000 in profit to get into the 7-figure range comfortably. Right. So let's say, for example, you've got a business. Now remember, these are the smaller ranges. Now let's go into $500,000 plus, because that's when you can definitely get the higher multiples. So let's say you've got a business and that business is doing £750,000. Let's use pounds now. Let's use euros, in fact. What's the euro sign again? I keep forgetting the euro sign. There you go. It's like that. No, it isn't. It's the other way. Mixing up the dollar and the euro sign. There we go. That's the euro sign. Finally got it. So 750,000. Yeah? When you've got a business doing 750,000, you start about 2 to 2.5. That's your starting point. Because your business has now created value in the marketplace. Unless you're within your industry doing 750,000 as the smaller range, then that's not going to apply. But if you're 750,000 generally in any industry, you're considered a business which has done well and broke past that initial stage, right? Why? Because a business which is doing 750,000 in profit is normally doing between 7.5 million, sometimes 10 million in revenue. So you're doing between 5 and 10 million in revenue. Only about 3% of businesses actually do a revenue more than 1 million. Okay, so 750,000 in profit. Now, let's say, for example, your starting point for that is 3, which is multiplied. So 750,000 multiplied by 3 is 2.1 something million. Euros. We want euros now. What is it? 21. My calculator. Where's my calculator? Oh, there it is. 750. And you don't need to be good at mental maths for this. 2.25 million. It's worth 2.25 million. Okay, 2.25 million. So now, comfortably in the 7-figure range. Comfortably in the 7-figure range. Let's say, for example, that same business, and that's why multiples are so important. Now, multiples can be increased based on the preparatory work that you do on your business. If you prepare your business for sale, in the sense that once the buyer buys the business, they don't have to do much to take over the running, or when I say take over the running of the business, take over the business and the business continues to run, they're probably looking to pay for a higher multiple. And also, you need to sell to the right type of buyer. Yeah, you can't sell to an individual or a small business for them to give you that kind of money. You have to sell to a bigger business. So you've got 5x, and okay, let's use the trusted calculator straight away. Yeah, 750, 3.75 million. 3.75 million euros. Yeah, so look at the difference. I mean, that's a big difference. That's 1.5 million difference in what you can attract as a sales price for your business. So if you want to be selling your business and it's a 200 to 1 million in EBITDA. Now let's take the 1 million mark. If you've got 1 million, let's keep to euros for now. You've got a business which is doing 1 million in profit. And then you sell that for, I mean, this is really easy. 4x is going to be 4 million. Yeah, 5x is going to be 5 million. That looks like an 8. That's a 5. Let's move this out of the way. I've got this thing. I don't know why I don't use it. Here, let me use it. So my children always use this thing. Okay, 5 million in sales price. So that makes a significant difference. So that's how you value a small business. And this is the financial element of the valuation, by the way. There's so many other things that go into valuation. There's weightings with regards to how many years that profit is being generated for. So for example, it makes a difference. If your business has done 500,000 3 years ago, okay, well, we use year 1, year 2, year 3. We'll say year 1, which is 3 years ago, it done 500,000 in profit. Year 2, it done, for example, 300,000 in profit. Okay. And in year 3, it done 400,000 in profit. You can't take 3 years ago number and multiply that. You can't take that. You don't take 2 years ago and multiply that. And you don't also take the most recent year. The most recent year has the highest impact because it's the current year normally. Yes? And the trailing year, right? So this is the most important one. What is the business doing now? Yeah, let's just change that from year 3 to this year. This year. This is the most important number. What is your business doing this year? Okay, and if it is doing more, so that business is worth, not going to be worth 1.5 million. It's going to be worth less than that. That's probably going to be worth about 1 to 1.1 million, something around that range. Yeah. Now, on the other hand, if for example this year, let's say you take a different business. First year 1, so 3 years ago. Let's put this year again. Yeah. So let's say 3 years ago, the business was doing 500,000. 500,000, and then in year 2 it done 600,000, and then this year it does 750,000. That business is going to be worth 4x or around about that range. Why? Because year on year there's growth. Year on year there's growth, and you can see what's happening. You can see the business plan is taking an effect. The business owner can say, right, we did this to take the profit from there to there. We did this to take the profit from there to there. If they know exactly what they've done, they had a plan and they enacted and acted on that plan, and that plan came to fruition and actually made an impact on the higher profitability and higher revenue, then that's good business. So right, what's your business plan for the next 3-4 years? Then they'll tell you the plan, and then you can adopt that plan, improve it, or use the same plan and take the business from 750 to 1 million the next year, for example, and then 1.5 million, yeah, and then 2.5 million, for example, yeah. That's what you need to take a look at. So that business is going to be worth more than a business which is got shaky numbers and the business owner. Now let's say, for example, the same business went from 500 to 600 to 750, and you ask the business owner, fantastic, got a great business, is growing year on year profitability. What did you do to take it from 500 to 600 to 750? They're like, oh, we don't know. Or they come up with some words which doesn't make any sense. The business owner doesn't even know how they've done it. Therefore, that business doesn't have a plan, and it's by chance that they've gone from this to this to this. Is that business going to be worth 5x? There's nothing you can put your finger on to say, okay, that's the reason why the business was sold or grew. So therefore, you're going to buy that business for between 2.5 and 3 times multiple, because there's no one knows what's going on. Yeah, 3 times multiple because there's still growth. Now, by the way, as a business buyer, if you can identify that as a team members, they're key individuals who have significantly contributed to the growth, and they had their plan to take it there, make sure that those individuals are going to stay on. Make sure that those individuals within the team are going to stay on, because they're integral to the growth of this business. So when you're looking to buy the business, you always need to identify who are the people who made this happen. And if they're the ones who are leaving, is that a good business to buy? Can you replace those people? Yeah. That's why if you're a business seller, you need to identify who those key people are, who made these numbers happen, and have them incentivized to stay on. Why? Because the business buyer is going to value that, and then they're going to, pay you for that value. They're going to pay you for that value. Anyway, there's a quick video on how to value a small business. Again, there's so much more that goes into valuations. I coach both buyers and sellers. This video, I'll have some link in the description. You can book a call and we can find out how I can help you in your journey when you're looking to sell a business.